To say there's been a bit of turbulence in the price of oil over the last month is a bit of an underestimate. It's been really volatile. It stormed on up into the $130 area, pulled back really sharply, and the big question that we now asking, is it stabilising at these levels, or are we going to see another dramatic turn to the upside or back down sharply to where it was a few months ago? Well, in this video I'm going to look at the technical analysis, some sentiment and fundamental tools to see where it could be possibly heading next. So with that, let's take a look. Well, our regular sentiment technical analysis tools, it's looking a bit more bearish. At the bottom there's seasonality. We normally see, a sharp decline in the price normally this time of the year before it settles down and then starts climbing back again. Commitment of traders data, both the large speculators and the large commercials stipulating or positioning themselves to a negative bearish point as the price had pulled back off and now starting to stabilise, but overall more of a bearish feel from those couple of tools. The Baker Hughes rig count, I like to use the US line, still bullish, but changed from prior count, 0 flat, and from last year still up 252, but Canada International looking a bit weaker. For those who like to follow the inventories, the forecast not out yet, normally comes out on a Tuesday for the Wednesday release. Last week's numbers 4.345 million, which was worse than expected against a minus 1.375 million figure. So back into the charts and a look at the longer term with the weekly chart. We can see that really big climb up from the sort of early part of 2020, and then over the last few weeks we can see the dramatic pullback from those highs around about $130-ish, settling down on the Fibonacci line there at the moment. But downside wise it could move quite dramatically back to those pink lines, trend lines there, for potential support. Upside wise, $140, $160 still not out of the question. It's probably all down to the fundamentals though at the moment to shift the price quite dramatically in either direction. The 4-line break chart giving us a bullish potential reversal in the price following that sharp pullback. Entry, and this is the longer term, $123.65. That's on a daily chart. If you want to speed that up, lower the time frames. The daily high can actually showing us the rebuilding in the price since that pullback of that's $35 worth of move, which is quite substantial. You see the last few bars turning more positive, down to those signals like I said, negative at the moment, but warming up, looking a bit more bullish. Volatility pulling off down to 72%, which is 20% above its average at the moment, about 50%. And then volume, it's calming down, it's slowing down since that sell-off. And on to the price. Well, it's pulled back within the 2 pink line box breakout setup, so neutral there at the moment. It's got actually a long way to go before it breaks that to the upside, and really it's supporting the price action around this $100 mark, psychological level. And as those blue arrows suggest, it's a bit of no man's land at the moment where it could be heading next in the shorter term. For the Renko chart, I've kept the block size at $1, normally at 50 cents, but that increase in volatility makes it more relevant at the $1 mark. Now onto the signals. DMI at the bottom just turning back bullish. The 2 signals above that both bullish. Going up onto the price, it's moving up after that double bottom in the late sort of mid-90s area into the 2 pink line box breakout setup, so neutral there at the moment, but that trend is up and strong. And to the upside, well, it's going to be targeting back the 130 area, those highs, then 145 and onwards if the news fundamentals, I would say, can shift it that way. If not, it's back down into that $100/$90 area where there's a lot of noise there back in the earlier part of sort of February of 2022, and then if it fails there, then it's actually a long way back down to the sort of pre volatile levels at the $70 mark. It was difficult to give a score this week, but I've stuck with a bullish overall opinion. That's based more on the shorter term Renko chart and the way that looked like it was warming up more to the upside. If we go back, to the Heikin-Ashi chart, then it felt a bit weaker, a bit more weak bullish, and a bit more in no man's land. But in the shorter term, it still feels, technically that is, based on the technicals, a bit more bullish. Now if we go to the targets, 2.71 and 4.85 to the upside, and 1.87 and 3.1 to the downside. But like I say, overall I'm going to score it bullish this week. So it was tricky to give a score this week because in the back of your mind you just know that those fundamentals could blow the oil price up in either direction very, very quickly. Ukraine, Russia, the OPEC wider community controlling the production levels, that sort of thing, can seriously change the price very quickly. But based purely on those technicals at the moment, it still looks pretty bullish. Let me know in the comments below what you think will happen next to the price of oil, and if you want to really discuss the topic further, then we have a free traders club on a Discord channel. I'll put the link in the description below for you to follow, where we talk all things trading. Feel free to join. I say totally free, and keep the discussion going there. Now if you like today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive further notification of content I'll be producing. All that's left for me to say is thanks for watching. Good luck with the trading. I'll see you in the next video.